Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss the number one complaint about E-Trade Solo 401k and how to fix it. If you have questions or topics on this topic or other unrelated topics, please go ahead and chat over those questions and topics at any time, and we'll go through those questions and topics sequentially. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax and financial advisors. So let's first lay the foundation with understanding the problem with the E-Trade Solo 401k. And the problem, or the number one complaint with E-Trade Solo 401k, is that it's a prototype plan that lacks certain key features. So it's a basic plan. It's not going to have a lot of the advanced features that so many clients are looking for. For example, the primary missing feature is the ability to make a Mega Backdoor Roth contribution. Now, the solution is to have a self-directed Solo 401k plan. That means a third-party plan like the one offered by my Solo 401k Financial that's going to provide all the features. For example, our plan is a fully featured plan. It allows, for example, for Mega Backdoor Roth contributions, as well as a number of other features that E-Trade's plan lacks, and that we'll go through here in a few slides. Moreover, we provide the compliance support as an optional free service for our customers' plans, but at the same time, we're totally neutral as far as where the accounts are at. So that means that the individuals, our customers, can have their Solo 401k plan through us, but have their accounts at E-Trade. So a self-directed Solo 401k is really a third-party plan. So that means the plan documents are going to be custom drafted to allow for greater flexibility, greater investment options, all the features like the ability to make Mega Backdoor Roth contributions, as opposed to a basic plan that's offered by a discount brokerage like E-Trade, which is going to be much more limited in terms of the investment options, the flexibility, the features. Now, just because you started out with a basic plan at E-Trade doesn't mean that you're stuck. So you can upgrade your basic Solo 401k plan at E-Trade to our plan to take advantage of all those advanced features, but you can still have your investments, your money in accounts at E-Trade, and we'll help you open up those accounts for the third-party plan, meaning our plan, and then transfer the cash and assets over from the pre-existing plan at E-Trade to the new accounts for the advanced third-party plan. So let's talk about the number one complaint with E-Trade Solo 401k, which is that it doesn't support Mega Backdoor Roth Solo 401k contributions. So what are Mega Backdoor Roth Solo 401k contributions? Well, really, it's a two-step process where you first make a voluntary after-tax contribution to a separate voluntary after-tax account, and then you can move the money from the after-tax Solo 401k account to either a Roth Solo 401k or a Roth IRA. But you need to have a plan that allows for both of those steps. E-Trade's plan does not allow for the Mega Backdoor Roth. However, our plan does. And again, you could have your accounts at E-Trade. So you could have a separate after-tax brokerage account at E-Trade into which you make your voluntary after-tax contributions, and then another Roth account at E-Trade into which you later transfer those voluntary after-tax funds, and then you make your investments through that Roth Solo 401k brokerage account at E-Trade. Just like any type of Roth contribution, the benefits are the potential for tax-free growth. Now, with the Mega Backdoor Roth Solo 401k, the contribution limits are much higher. For example, for 2025, if you've got the self-employment income to justify it, you could contribute up to $70,000, which is 10 times how much one could contribute to a Roth IRA. So you can see it's much more powerful in that regard. The next missing feature with E-Trade's Solo 401k plan is that it doesn't allow for investing in alternative investments. Now, of course, our plan does allow for investing in typical brokerage type investments, which again, you could do through E-Trade, right? Whether it's stocks, bonds, mutual funds, ETFs, etc. But in addition, our plan would also allow for investing in non-traditional assets like real estate, cryptocurrency, Bitcoin, private equity, pre-IPO stocks. So you can have the ability to invest in the same type of investments that E-Trade Solo 401k plan offers, meaning those brokerage type investments, but also have the ability to truly diversify into alternative investments. The $1,500 Solo 401k tax credits is another missing feature with E-Trade Solo 401k plan. So in order to have a plan that qualifies for the tax credits, you need to have a plan that has the automatic contribution feature enabled, that has all the required notices, the forms. So we automatically draft our Solo 401k plan document to support the tax credits. And keep in mind, this credit is not only available to new plans that include the automatic contribution feature, but even existing plans. So if you have that basic Solo 401k at E-Trade, you can upgrade it to our plan, and then the self-employed individual would be eligible to start claiming those credits. Those credits are $500 for 3 years for a total of $1,500. Keep in mind that it's a tax credit, not a tax deduction, which means that it's a dollar for dollar reduction in the individual's tax liability. Now, again, in order to be eligible for the credit, the plan needs to have the automatic contribution feature enabled. But keep in mind, while that automatic contribution feature will set a default 3% contribution percentage, the self-employed individual has the right to opt out of the default. So that would enable the person to then make contributions in whichever amount or schedule they prefer, of course, subject to the limits and the deadlines. But just because they exercise their right to opt out of the default 3% contribution percentage doesn't mean that the plan doesn't have the automatic contribution feature. Therefore, even though they've exercised their right to opt out of the default contribution percentage, they can still claim the credits. 5500 EZ support, another very important but missing feature with E-Trade Solo 401k plan. So what is the 5500 EZ? Well, the Form 5500 EZ is an informational tax filing. So once the value of the plan, including the value of any defined benefit plan that might be sponsored by the self-employed business, once the total value exceeds $250,000, there is an informational tax filing requirement. So in other words, the business needs to file the Form 5500 EZ, which provides information to the IRS about the Solo 401k. So E-Trade is not going to handle that 5500 EZ, even if the value exceeds $250,000. So that in that case, the self-employed person, individual, would need to typically find a third party to handle it for them, maybe a CPA or another provider. Now, for our plan, for our clients, we handle that as an optional free service for our customers. They just need to let us know once the value exceeds $250,000 so we can add their plan to the queue to prepare the 5500 EZ. It's also noteworthy that we prepare that 5500 EZ under the electronic filing system to make it easy for the customer. In-plan Roth conversion and employer Roth. These are additional important but missing features with E-Trade Solo 401k. Additional complaints that one might have about E-Trade's basic Solo 401k. So number one, in-plan Roth conversions. So this is where someone could take money that's in their pre-tax Solo 401k and transfer it to their Roth Solo 401k. Now, of course, that's going to be taxable for the year of the transfer because it's going from a pre-tax status to a post-tax status. It's also going to be reportable. That transfer needs to be reported as a taxable conversion on a Form 1099-R. But the benefits is now that you have more money in your Roth Solo 401k account. So going forward, you've got that potential for tax-free growth. So it's just another way to accumulate funds inside your Roth account. Now, you need to have a plan, though. You need to have a plan documents that allow for the in-plan Roth conversion or rollover. And our plan documents do. In addition, we prepare the 1099-R as an optional free service. In other words, for no additional charge. Now, the other way that folks are getting funds into their Roth account is by making employer contributions as Roth contributions. But again, even though Secure Act 2.0 allows plans to offer that as a feature, the plan document needs to support it. E-Trade's plan documents do not support it, whereas our plan documents do support it. Moreover, that type of contribution, when one makes an employer contribution as a Roth contribution, it also needs to be reported on a 1099-R, which again, we would handle that as an optional free service for our customers. In other words, no additional charge. Next missing feature is checkbook control. So as the solo 401k owner, as the self-employed individual, you act as the trustee of the plan. And under the rules, you can have direct checkbook access to your money, to those solo 401k funds. But you need to have an account that gives you that checkbook control. So with our solo 401k customers, we're totally neutral as far as where the account is. So they've had their accounts at E-Trade or Fidelity or Schwab, or we've helped customers open up accounts at hundreds of different banks and credit unions. Now that checkbook control can be instrumental, especially for those customers that want to invest in alternative investments, because now they can act quickly to take advantage of investment opportunities. So that's another key feature, especially for those customers that want to have the option to act quickly to take advantage of alternative investment opportunities. And that takes us right into the flexibility to open accounts. So of course, with E-Trade's basic solo 401k plan, the accounts need to be at E-Trade. Whereas with our plan, yes, you could have your accounts at E-Trade, but you could also have them other places. Again, we're neutral. Could be Fidelity, could be Schwab. Again, we've helped customers open up accounts at hundreds of different banks and credit unions. Different employer contribution amounts. Another important feature is the ability to customize. In other words, to vary employer contribution levels between participants. So even though a solo 401k plan is considered to be technically a one participant plan, there are exceptions to that one participant rule. One exception is for spouses that are working in the business. So in that case, it's still considered to be a solo 401k, but you might have two participants, for example, two spouses that both work in the business. Now, the ability to make employer contributions is going to be a function of each person's self-employment income. And then they can contribute a certain percentage as an employer contribution. For example, if the self-employed business is taxed as an S corporation, their ability to contribute is going to be based on the W-2 wages that each spouse receives from the self-employed business taxed as an S corporation. And then that contribution limit is 25% of their W-2 wages. With E-Trade solo 401k plan documents, each spouse is going to have to contribute in the same percentage. Whereas with our plan documents, it allows for customization. So if one spouse wants to contribute 25% as an employer contribution, but let's say the other spouse doesn't want to make any employer contributions, that's fine. They can do it. The plan documents support it. Okay, wonderful. That takes us to the end of the slides that we wanted to share. Thank you so much for checking out today's session. We're going to turn now to the questions that are chatted up. If you have more questions, we see at least one here. We'll turn to that in a second, but please go ahead and chat over questions, whether on this topic or either unrelated topics. We really appreciate the chance to engage and answer your questions. If you're finding this video to be helpful, please like this video on whatever social platform you're watching on, whether on LinkedIn or YouTube or X, etc., as that really helps us to get the word out to other self-employed individuals just like you. All right, let's turn to the question. Can I buy residential investment properties using my self-directed solo 401k if I open the account with E-Trade? No, you can't. Not if you get the basic solo 401k plan that's offered by E-Trade. However, if you set up a solo 401k with my solo 401k financial, then yes, you can, because our plan does allow for investing in real estate, including single family rentals, multifamily, etc. So you could have your brokerage account at E-Trade to invest in brokerage type investments, have a separate bank account that might facilitate those real estate investments, because now you're going to get access to, for example, a debit card, certified bank checks. You know, if you want to go to an auction, right, to buy a property, or you need a debit card to pay the landscaper that's working on the residential real estate property, etc. That can help facilitate all that. Great question. Thank you so much for bringing it. Submitted a question earlier when I registered. Is that available for you to see? Let me see if we can find it. Thanks for doing that. I'm not sure if you submitted it through StreamYard or on the community. Let's see here. Not seeing on the community. I'm not sure. I know that definitely people post all types of questions in the StreamYard, but I'm not seeing any pre-questions that were submitted. To be honest, I didn't even know you could do that. Let's see here. If you could please chat over your question again, we'd really appreciate that. Thank you so much. Unless you emailed it to us. Maybe you emailed it to us. Oh, I think I found it here. I'm thinking to open a solo 401k as a self-employed. I need advice on the timing of opening, given that I'm planning to use a sole proprietorship Schedule C income. I would like to get started now, but I have some concerns related to the fact that I'm currently in the process of getting a divorce. In the divorce, we have a solo 401k as a marital asset invested in rental properties. Am I supposed to get some of these properties and prefer a solo 401k instead of self-directed IRA? Yeah, that's definitely good. That's a good thought to think about that in advance. I don't see that you previously set up a plan with us, at least under that email. But it looks like maybe it was a different email. So essentially, if you already have a solo 401k, then you, with us, then you wouldn't set up another plan through us. And I can see we had some communication with you back in 2023. And just to remind you though, it's going to, when you have a situation where the solo 401k owners are getting a divorce, the assets are divided via quadro. So a qualified domestic relations order. So that's something you would need to coordinate with your divorce attorneys to help divide up those assets. It's probably going to make sense to book a call at mysolo401k.net/book. But hopefully that gives you some initial feedback at least. Thank you for bringing the good question. Could you cover in detail how the Mega Backdoor Roth works using my solo 401k and Vanguard or Fidelity? So thank you so much. That's one of the top reasons why people set up accounts with us is the ability to make those Mega Backdoor Roth contributions. So the prerequisite is that you have to be self-employed with no non-owner, non-spouse employees. That allows you to set up a solo 401k plan with us. And then you need to have accounts for your solo 401k. Now, while we are neutral on as far as where those accounts are opened up, and Fidelity is definitely the most popular brokerage where customers are opening up accounts for their solo 401k, Vanguard will not open up accounts for third-party plans. So it could not be at Vanguard, but it could definitely be at Fidelity. In that case, there would be 3 different accounts at Fidelity. So for example, there's going to be one account opened up under the name and the EIN number of the plan. So we're the plan provider. We obtain the EIN number. We'll help you open up these accounts. So it's one free brokerage account. Fidelity doesn't charge anything to set it up. It's going to have the same type of investment options you'd have with an IRA at Fidelity. So you can invest in stocks, bonds, mutual funds, plus alternative investments because our plan document, which does govern that brokerage account, allows for it. So Fidelity doesn't offer their own solo 401k that supports Mega Backdoor Roth, but they will open up accounts that are governed by third-party plan documents. They refer to those as investment-only accounts. So you'll need at least 3, right? You'll need to have one for pre-tax money. So that could be for pre-tax contributions or if you're rolling over money from another retirement account, like a former employer plan or a non-Roth IRA, it would go into that same pre-tax account if it's pre-tax money. Second, you would need to have a Roth account. So it's a second account opened up under the name and EIN number of the plan for Roth money. And then a third account opened up under the same plan. So it's just still one plan, but you got three different sub accounts, pre-tax, Roth, and then the third is voluntary after tax. So the Mega Backdoor Roth contribution entails a two-step process where the individual first makes a voluntary after-tax contribution and then moves the money to the Roth account. So it's a two-step process. That's why it's referred to as a backdoor, right? And it's a mega backdoor because the contribution limits are so high, right? The voluntary after-tax contribution limit is 100% of the self-employment compensation, dollar for dollar, not to exceed the overall limit, which is $70,000 for 2025. So if the individual doesn't make any other contributions to the solo 401k other than the voluntary after-tax contributions, and they have at least $70,000 of self-employment compensation, they can contribute the full $70,000 into the after-tax. So that's 10 times what they can contribute to a Roth IRA, and then move the money from the voluntary after-tax solo 401k account to the Roth account. So that first step, the voluntary after-tax contribution, that doesn't need to be reported on the personal or the business tax return. But the second step, when you move the money from the after-tax account to the Roth account, that would need to be reported on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. So there's a form on our website customers use to provide us the information about that after-tax to Roth transfer so we can capture what we need to be able to prepare the 1099-R. Hopefully that sheds light. Let me grab a quick page on our website. That is a good launching page to learn more about it generally. I want to open the self-directed solo 401k with your company. How can I make sure that it's going to be set up for ability to invest in commercial and residential properties? Well, because that's one of the top reasons that customers set up accounts with us, and we automatically draft the documents to support that. So it's there for you. You don't necessarily have to invest in those types of investments, but if you want to, the plan documents are already pre-drafted to allow for that. Great questions. Thank you so much. I have a W-2 day job and other passive income from real estate on Schedule E. Can I move some of the passive income into active income for property management as self-employed on Schedule C and qualified to open a solo 401k? Well, I think for you specifically, it sounded like you might already have a solo 401k with us. So again, you're welcome to book a call at mysolo401k.net/book. But generally speaking, you need to have self-employment income to justify setting up a solo 401k with no non-owner, non-spouse, full-time W-2 employees working for you. Now, how you report your income, whether it's passive income or active income, is really a question for your tax advisor. So you'd want to pose that to your tax advisor. But if you're going to report it as earned self-employment income on Schedule C, and there are no W-2 employees working for any business owned by such person or a spouse, if any, then yes, that would certainly qualify to open up a solo 401k. You guys will help with exactly which accounts to open. Yes, I want to be sure I'm making contributions and moving fast enough to avoid tax in step 2. Yes, we definitely do. It's one of the We're helping customers open up accounts every single day. I mean, thousands and thousands of customers who we've helped to open up accounts, for example, at Fidelity. So catch-up contributions, those are not made as voluntary after-tax contributions. Those are either made directly to the pre-tax account or the Roth account. So for example, for 2025, the catch-up contribution limit is $7,500 or $11,250 if you're age 60 to 63 because of the new super catch-up contribution limit. So again, if you want to make those catch-up contributions, you got the self-employment income to justify it. You haven't made the contributions to another plan like a day job plan. the catch-up contributions would either go directly to the pre-tax, in which case it would reduce the taxable income, or directly to the Roth. All right. Well, thank you so much for the great participation. Please continue to participate. We do go live every single day. So if you subscribe to our channels, you'll get notifications of when we go live. You can hear the content that we come to share, come and ask questions. You can also participate 24/7 on our community, which you're totally welcome to join. It's 100% free. All are welcome. You can join easily at mysolo401k.net/my-community. We've got over 30,000 members, which means there's vibrant forums, there's videos and webinar libraries. So there's a lot of great ways to learn on there. So I think your question is about the catch-up contributions. So remember how I talked about how if you have, because I think you're interested in doing the Mega Backdoor Roth and having the accounts at Fidelity. So as part of the onboarding process, we ask customers, where do you want to have your accounts at? So if you say, oh, I want to have them at Fidelity, then we would help you open up the requisite number of accounts. So if you want to do Mega Backdoor Roth contributions, we would help you open up 3 accounts, a pre-tax, a Roth, and the after-tax. So the Roth and the after-tax, those are used for that 2-step Mega Backdoor Roth contribution process. The pre-tax could be used if you're going to make pre-tax catch-up contributions, or the same Roth could be used if you're going to make Roth catch-up contributions. Well, we help our customers open up accounts at the bank or brokerage of choice. These are opened up with third parties. So we don't provide the account. We don't have access to it. Now, you can have both a bank and a brokerage. The key from a bank perspective is that it's opened up under the name and EIN number of the plan. Some banks will refer to it as a trust account. Some will refer to it as a business account. Ultimately, that internal label is not determinative. And what's most important is, again, that the account is opened up under the name and EIN number of the plan. But we absolutely are very hands-on in helping customers open up accounts. Whether at a bank or at a brokerage, you can open up brokerage accounts at the beginning of the process and then later open up bank accounts, and we'll help you through both processes. All right, wonderful. Well, please like the video. Please subscribe. And we appreciate the engagement. Until next time, everyone, take care.